Well, we reached the month of February and a lot is going on, no surprise. And a lot is happening with interest rates, as we've seen with the Fed. So we had an update with Bill Litton over the last month in January, what we've seen so far in 2026, what this means right now. And hey, where are we headed as well? So, Bill, welcome in. I hope your year's off to a good start.
Yes, Ben, it's been a cold start. So anybody who's in our area will tell you it's been very cold, but the market is moving. People are out there making offers. So we feel like this is a great start to what should end up to be a great year.
Yeah, it should be. And I know we're getting close to spring, but I think the good news so far, just to lead off this market update is just interest rates seem like they're ticking lower and lower. And I think, I've seen looking around at some places, it looks like we're getting close to inching into the fives a little bit, right?
So absolutely, we're getting close to the upper fives on a 30-year fixed. In fact, we've been quoting with a small amount of buying down the rate, 5.99% on a 30-year fixed. The national average is closer to 6.1%. So we're a little bit below that average, which is good for our customers. And if you're on a 15-year loan, which we don't do as much with, but they are available for the right scenario, we've been quoting those in the mid fives. So rates are about 1% lower than where they were this time last year, which is really great news. We do feel like with the Fed's mandate and their decreasing interest rate goals globally, for all interest rates, that we should see a slow grind lower in rates this year.
And the good news is, too, if you go back a year ago, if you probably go back and listen to our update from February of 2025, I mean, rates are down almost a full percentage point from that point, right?
Rates are down about a full percentage point, which translates into a lot of savings and interest on a monthly basis. So it's definitely helping people to, feel more comfortable with payments when they're looking at houses. We've seen people's delight in when we show them the payments, how much lower they are. And I think it's a market mover. Now, we do feel like there's a little bit more movement that would be extremely beneficial if we can get a 30-year fixed roughly at 5.5%. We feel like that's also going to have a big impact. That seems to be an important threshold based on surveys that we see, but everything's trending in the right direction, and we're grateful for that.
Yeah, great news indeed. So, looking back over the last month, Bill, what have kind of been the main drivers of these rates, and kind of what have been the biggest stories that you've kept an eye on?
Well, the things that tend to drive interest rates would be Federal Reserve policy, the bond market, inflation and economic data, mortgage-backed security demand, right? So that's like the outline. But inside of that, really important is the current administration had directed Fannie Mae and Freddie Mac to purchase roughly $200 billion worth of mortgage-backed securities, Fannie Mae and Freddie Mac mortgage bonds. So the added liquidity into the market certainly signals a Fed that is very pro lower mortgage rates, and they're going to pull different levers to do that. Also, the continual cooling of inflation, and every time we get a inflation number that either stays steady or decreases, it's very helpful. Now, the Fed did hold the federal funds rate steady at their last meeting, but that was not a surprise. That was expected. And I think because GDP came in where it did, and they're still trying to maintain a balance because of where GDP came in, they didn't feel like the federal funds rate was a requirement to be lowered at that session. But we're still doing other things because, Ben, we talk about it all the time. The federal funds rate is not direct causation for lower 30-year fixed rate mortgages. So although they held that steady, they're pulling other levers to help lower 30-year fixed rate mortgages.
Yeah, and I don't know how much you pay attention to the Fed chair and President Trump nominating Kevin Warsh to replace Jerome Powell when his term ends in a few months. But do you think that'll have much of an impact? Is that something that you think's worth paying close attention to, or what's your overall feel on that?
Yeah, well, we do think it is something that needs to be added to the equation, and it probably will have an impact. I don't believe that the president would put somebody in there who has differing views on where they want interest rates. I do also believe that this particular person, if he becomes the Fed chair, not only will he be pro interest rate specific mortgage rates, but I do think he's got a very different view on how the economy functions with regard to GDP and interest rates. So the belief that you can run GDP above 3% and still keep interest rates low and not cause a flare up in inflation. So I think there's a different view with this Fed chair than the last several Fed chairs, a different script and an outside the box view on what our economy is capable of.
Yeah, it'll be interesting to watch that for sure. So when you look at kind of where we stand, Bill, let's talk about what this means for buyers and sellers right now. You can pick kind of where to start, but how is this affecting your business and kind of what you're seeing with the market?
I think the biggest takeaway is, we can't predict the future, but we've been in like a steady range of low 6% rates. So if you get into the market now and your time horizon is to buy in the next 2 to 4 months, maybe 2 to 6 months, we feel like you can count on whatever payments we're quoting you and budgeting that you're doing, that we're in a new range in the low 6% range, and that should be stable without any dramatic spikes into 7%. So that's really good news that you can shop, look at houses, and estimate payments in a stable range. We also do believe that, again, when the Fed puts their resources into something, they usually get their way, and that they want lower interest rates to support the housing market, that you might have an opportunity to refinance down the road. So whatever you get into the house at rate-wise, you're going to have an opportunity to refinance. And then also rates coming down is having an effect on budgeting and people that are payment sensitive. This is easing the pressures of those higher payments. So in many ways, this is really helpful for people entering the housing market, whether they're a first-time home buyer, a move-up buyer, or a downsizing buyer. If you're borrowing money to do any of those things, there's a lot of positive areas this will support your new home purchase.
Yeah, and as you kind of mentioned, things have kind of grinded down a little bit more, but I don't think anybody would suggest that rates will just collapse all of a sudden too. So I'm guessing for anyone that's in the market, it still makes a lot of sense to go ahead and lock up a rate and go ahead and get all that done as you're going out and searching for a home.
Yeah, I think that the higher interest rate, 7% days, are hopefully behind us. There's a really strong probability that that is the case. So if you're out there looking, the rates that you're being quoted now, you can count on. And there's a lot of pressure from the Fed to lower interest rates even further. So, we always believe it's a good time to buy, but maybe it's even a better time than it was a year ago. And that we're seeing that in the happy responses and conversations that we're having with our customers.
Yeah, that's good news. So overall, I think a positive start to 2026. Obviously, a lot to still watch over the course of the next 10 months and more importantly, the next few months as things change and as we head into spring and a busy time typically for real estate and home buying. So we'll track there, but please go ahead and hit subscribe on the channel as well. We'll have another market update coming soon, plus a lot of other videos in the meantime before we get to that. But we appreciate you watching as always. And make sure you always log on. All the contact information is in the show description as well, but you can go to smartmortgageshow.com to connect with Bill and set up a time to talk with him. But we appreciate you watching as always. And Bill, thanks for the update.
Thank you so much. Have a great day.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.